a lot of insurance companies may decline to insure those cars that are above 12 years. I mean, above how many years?
15 years.
A car that was
In fact, I've seen even 12 years.
Yes.
There are companies that will decline to insure.
12 years and above, you might find some insurance companies declining to give you a comprehensive cover.
Hi guys, I hope this video finds you well. My name is Martin, in case you're here for the first time. Na sisi ni watu wa insurance. We do civic education as well as reviews on insurance, especially within the Kenyan market. Definitely, if you are new here, expect a lot of conversation around insurance, and we have been responding to most of your questions. And if we haven't responded to any of your questions, be sure we will do it. We are just responding to them one by one. And in today's video, we are responding to one of you who we are responding to this post that talks about reviews in terms of premiums. Ama motorist ama watu wa magari, they might end up paying more on insurance premiums, especially for older cars, ama zile gari bado ziko na lower value below 600k. So there's a ruling that was made I think this month. So this is what we are looking at. So e-post is the one that we are responding to. And of course, today we have Moi with us. He has been helping us to understand some of these things, and this is the conversation we want us to have about what it means for this ruling that talks about motorists with older vehicles may end up paying more for insurance. So make sure that you like this video, subscribe if you haven't, turn on the notification bell so that every time we have a new video you'll be notified. And also leave a comment and a question in the comment section, and we'll be able to respond it in the next video. Let's get into the video. So karibu Moi, I want us to have this discussion. There's this ruling that was made, I think in the course of this month, yes, touching on insurance, raising premiums or having the ability to raise premiums, because that was the contest. So I want us to have that conversation. What are the implications? Maybe first of all take us through the ruling.
Yes.
What was the issue and how was it ruled?
All right. So thank you, our viewers. I'm always delighted to be in this platform. Number one, to inform you and to update you on what is currently happening in our industry. Insurance is quite wide. We can't really exhaust everything in a day or even in a month, because it's quite dynamic. It keeps on changing.
Yes.
And today we are focusing on a ruling that was made this month, to be precise, where the Kenya Human Rights Commission had gone to court.
Yes.
Yeah, arguing that insurance companies should not increase the premiums for those cars that are above that are
older vehicles. Yes.
More than 2012.
Maybe to be specific.
Yes.
You realize that some companies will not give comprehensive insurance.
Yes.
For vehicles above 15 years.
Above 15 years.
Some maybe 20 years.
Yes.
So for older vehicles, you realize that the premiums are a bit higher.
Yes.
So the contest was, or Kenya Human Rights Commission was saying, insurance companies should not have that liberty to increase the premiums.
Yes, without really consulting.
Consulting.
Yeah. So what you'll find is that when the Kenya Human Rights went to court, the argument was quite genuine, because you'll agree with me, majority of Kenyans have cars ranging between 600 to around 1 million.
Yes.
We have a very big population that have
those vehicles. Below 600.
Even below 600.
Yes.
Now the implication was that if you just sit down one day and increase, that one may have implication in an ordinary person's pocket. So once they went to court, that was back in 2022. The court looked at what they brought forward. Unfortunately, the court ruled in favor of the insurance company. So that was in January 2025, and they agreed that as much as it's important to consult, these insurance companies, remember, they are privately owned.
Yes.
So they are at liberty to review the rates when they deem so, because there are a lot of things that keeps on changing.
Yes.
And among them is the rate of claiming. Yeah.
Yes.
What you will see is that those motor vehicles that are quite old, they are more likely to have challenges of mechanical. At the same time, because there are so many, they are more likely to
have claims.
Cause a lot of claims, or to have a lot of claims. That one would be detrimental to the insurance companies.
And I think there is data to show that.
Yes.
Based on the laws that the companies or the insurance companies made on 2022
and 2023. Actually, this 2023, the laws came to around 5.3 billion. 2023. But it was even worse back in 2022 because the industry-wise, insurance companies lost over 7.5 billion.
Yes.
Yeah. So 2024, the report is yet to come out, which we of course expect to be a little bit
or maybe the effect will be for this year now, 2024, going forward.
Yes, going forward,
because now they have been given the leeway,
yes,
to review their prices.
Oh, of course.
So before then they had not reviewed.
So this year, the report for 2024 is yet to come, but we expect that the loss ratio might have dropped.
Yes.
So we are seeing actually insurance companies really stabilizing. Yeah. So there are some of the effects of this ruling to both the insurance company and the multitude or the owners of the car. One of the things that we expect to have is this. We expect to see now the implication to all the parties involved in insurance. One, we have the company itself, we have the insurance companies, and we have the implications, the car owners. So to the insurance company, we have said that if there is some limitation of the cars that are being admitted for insurance this year, we are likely to see some insurance companies really growing quite fast. So growth of insurance companies, because one, we understand that there are cars that are very, very likely to cause accident. When the car is too old, we understand that the
risk is high.
The risk is quite high. So if there are some insurance, if there are some cars that are not admitted into this,
that is in that category of the old cars.
The old cars are not allowed to insure comprehensive wise. We are likely to see some growth. Yeah.
So in short,
yes,
companies will stop losing money on old cars.
Absolutely. Okay. So fewer losses in terms of comprehensive, but it has some kind of a negative implication
on the car owners.
One is that we expect that majority of insurance companies, especially this year, will, number one, raise premiums.
Expect more.
So this year you are likely to hear
pay more.
A lot of insurance companies saying this is our minimum, and actually from 2024 majority of insurance companies, because what we have in the industry are what we call tires. Tires categorizes insurance depending with the asset base. The tire 1 have higher asset base than the tire 2, and the tire 1 the likes of maybe Britam, CIC, Jubilee, Madison, yeah, and we have the tire 2, which I don't want to specifically mention them, but those tire 1 raised their insurance premiums for actually third party up to 15,000.
Yes.
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 We have some which are charging 15,000. We have
It's actually between 10 and 15,000.
between 10 and 15,000. So we expect some more this year. However, we shall be notified prior by the insurance. But the easiest way is to contact your agent. He can be able to
know the
advise.
changes.
Yes. So one is raise of premiums. Number two is decline. A lot of insurance companies may decline to insure those cars that are above 12 years. I mean, above how many years?
15 years.
A car that was
In fact, I have seen,
manufactured 2012.
yes, I've seen even 12 years.
Yes.
There are companies that will decline to
So
insure.
12 years and above, you might find some insurance companies
Declining
to give you a comprehensive cover, meaning that you are likely to carry the burden alone. Of in case of any accident, you will have to
bear the cost.
when an accident happens. And lastly, so we've said raise of premium, yeah,
decline,
and again something we call profiling.
yes,
Profiling by insurance companies. So what you'll find is majority of insurance companies, especially Tier 1, have come up with ways of profiling you so that they are able to charge you accordingly. And nowadays, let us look at one particular company that is under Tier 1. There are some of the things that they are looking at while giving you an insurance. Are things to do with age. By the way, for you to our surprise, majority of people who are above 50 years, they are being charged less for the same car, for the same type of a car. Yeah. Let me take an example. If you have, let's say, a Prado, Toyota Prado, if you have a Prado and you are between age 50 and age 60, and we have another person who is aged 20 to around age 24, for the same car, you will be charged differently. So there is no standard rate for this particular car. So what the insurance companies are doing, one, they are profiling you in respect to the following. One is the age. Age. So they understand that that person who is between 20 years and 24,
they are not as careful as someone who is 50.
Absolutely. So you are likely to speed. You want to really compete on the road when you are in between this age. But someone who is 50, they are quite composed. Even on the road, you can see. So that is one. Age is one of the things that insurance companies are looking at. Number two is the type of the vehicle.
Subaru.
Type of vehicles. So let me put it this way. All the Toyota cars have lower rate than the other cars, car models. For example, if you compare a Toyota and a Subaru, you'll have to pay more. Mazda, you'll have to pay more, and particularly because of the prices of the spare parts. Mazda Demio, it's original fog light, or what do you call them? These are lights. They are very, very expensive compared to the Toyotas.
Axio.
Yes. So tumesema moja ni age ya kijana ama age ya the driver, the type of the car, the age of the car. So a car that is new is being charged less than the car that are quite old.
Yes.
Another thing is history of the claim. How many times have you claimed, or has this particular car been involved in accident before? So and again, if you want other extra benefits, so we have extras. By extra I mean if you want a comprehensive car motor insurance, do you want to add what we call loss of use? That in the event this car was being used for business, if it got lost, do you want a replacement? Do you want what we call courtesy car? Another thing that they look at is, do you want a personal accident cover? Because majority of insurance, as much as you are taking up a comprehensive insurance, you are not included in that insurance as a driver. So insurance companies are coming up with ways, if you want to have a comprehensive insurance, personal accident cover, you may be asked to add some extra money. Another thing that is very, very important is what we call excess protector. It is very, very important as you take up, because it is optional. That one may make your insurance to be a little bit high. Higher,
but with more coverage,
but with better coverage. Yeah, so those are basically some of the changes that we expect. So we expect some profiling by the tier 1, especially those that are quite advanced. We are also expecting some premium raise, especially for third party cover, because they are the insurance that causes a lot of losses for insurance companies. So as I've said, 2022 the loss by the insurance industry was around 7.5 billion. 2023 5.2 billion. This year we expect some decline. Yes.
So they kind of were adjusting the prices to mitigate the losses.
Absolutely.
One of the reasons
so it is to protect itself from a collapse, because we have experienced a lot of insurance companies closing down because of claims, them being too many, such that you can not handle. And that is why we ask our viewers, always don't just buy an insurance. You might be buying an insurance because of the price. Unfortunately, when something happens, you unaachwa kwa mataa. Yeah,
maybe you do a different video touching on now what you have mentioned about tier 1 and tier 2, at least to see the differences. Ndio at least mtu akinunua insurance, one of the factors zenye inafanya uchague company A over company B is ikuwe ni price peke yake.
Agreed.
Sindio?
Yes.
So I think we have covered most of it. We expect some changes maybe going forward, but this one is not a mandatory. Tumesema companies have been given a leeway to review their prices, but it's not that they have reviewed.
They have not reviewed. That one I can confirm. However, we expect some changes.
Yes.
Especially for those people who have cars below 600,000 and cars that are that were manufactured beyond 2012.
Yes.
That is 2012 kurudi nyuma. We expect some changes. Yes.
Okay. Wow. Okay. So in case you are there and maybe you feel there's something that we have left out in terms of what we are talking about, the reviews on motor insurance, post that question up for Chini and we'll be able to respond to it either through the comment section. So thank you for watching this video to the end. And if you also have you want to consult in terms of you want to buy a cover lakini haujui where to begin, our contacts are in the comment section and also are running on the screen. Make sure to reach us out and we'll be able to help you out to make a good decision. So thank you very much, and until we see you in the next one, God bless you and bye bye.
Thank you.